In this video, I aim to quickly explain to you what to do if a chart, or in this case the FTSE 100, is trending up, and what that means to you. Now, when you first look at a chart, you can either quite obviously see in which direction it's going, which is the predominant trend. If you look at the instructions within the manual or within the training, you will find that we use a default sort of 6-month view. This sort of lends us to be able to see what the initial trend is, what the current pretty much predominant trend is, because predominant trends usually will be covering 6 months or more, but we really want to be able to see a period that's relatively easy on the eye, that's something that we can monitor and gauge relatively quickly, and allows us to make a pretty quick trading decision, or not so much a instant trading decision, but one that allows us to gauge where we're to create a short list. And then from that short list we can then create sublists of ones where we think it's going to go up, ones where we think it's going to go down, and ones in which are consolidating and maybe going in one direction or the other. So once you're presented, for instance, with a chart like this, which is the current FTSE chart, and because we're later in the training now, we're using candlesticks, which will be covered in another video, but we're using candlesticks so you start to become familiar with them too. So initially what we have here, pretty much if we're using the Dow theory, is that we can see that there's the 3 stages. That we've got stage 1 there, pretty much got stage 2 there, I would imagine, and then we're coming to the part of stage 3. So if we were looking at this chart right now, which is pretty much what we're doing, what would we decide to do? Would we look to then for a sell-off, which is where the market begins to go downwards? And looking very quickly, we're obviously at the 3rd stage of that trend, of a bullish trend. And also, another thing which we'll be covering in another video, is we have a resistance. A resistance obviously is where it's reached a prior point and has faltered and traded back down, but we're reaching that resistance again, and by reaching that resistance, combining that with the final stage of the bullish Dow theory, stage 3, we could begin to see the decline and a move into a bearish trend and the beginning of phase 1 or stage 1 of the Dow theory for a bearish trend, a negative trend. One of the other aspects we can do is that we can obviously monitor that there's a range there. There's a range between 500-600 and this point here. So looking at this, we would obviously go short from this point, because there is a very strong indication that we're seeing the chance of a potential drop. We're coming to the end of the stage 3 of the bullish part of the Dow theory. We're reaching a very strong resistance, and we're also seeing a range between the very top here and the bottom at 500-600. So you could, or would, in that instance, look to use this as a possibility of going short, in other words making money from the markets going downwards. Where your initial target would be, well then you would look at this overall and say, well, you know, we're sort of starting to see some consolidation, and I like to use the word midpoint, and a midpoint between 2 ranges is obviously the middle, and what you tend to see is the beginnings of a support or resistance, the beginnings of a consolidation within that main period of range movement that we can see here, and then you can use that as an initial target. So you would say perhaps that your initial target would be 5,800. So as you can see, just looking at a chart like the FTSE, we can gain and garner quite an awful lot of information very quickly indeed from just using some very basic technical analysis methods, by using supports and resistances, by using midpoints, and by using the Dow theory alone, we can pretty much gauge what may happen. Obviously, this is just what may happen. It has been known for trends to continue upwards from what most people would assume was the end of a stage 3. But the overall thing with analysis is that you're trying to put the odds in your favor, rather than just grasping at straws and trading from there and just thinking, well, it's going up, I'll trade in that direction, or it's going down, it's trading in that direction. We're using analysis to pretty much gauge what we feel and what we understand the market is doing and telling us, and then we trade appropriately. By doing it that way, we're making more of an educated guess on what the market is doing. By making more of an educated guess on what the market is doing, we're putting the odds not enormously in our favor, but enough in our favor to sway the balance from one where we're simply tossing a coin to one where we're actually making informed decisions and treating trading much like you would a business, that it is a business, that there's going to be losses, but you're trying to put the move and the trend and the favor in making money as opposed to losing it. So I hope this video has been helpful. Don't forget to watch many more. Thank you.